EBIT declines after 8 successive quarters of growth. Refining EBIT too is down 17% quarter on quarter.
Geo numbers, it appears the revenues would have come in at about 11,100 crores.
We're seeing a 52% growth in the retail business.
Even the P&L, along with asset quality improvement in terms of percentage basis points, it's a strong and commendable performance from the bank.
Very clearly, the asset yields are holding up, and that's positive for HDFC Bank.
Reading of the Monetary Policy Committee minutes indicate that there is more dovishness. The minutes themselves give an indication there is a rate cut in June.
There has never in the history of the Indian judiciary been a case of sexual misconduct against the CJI, against the Chief Justice of India himself.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia. After a relaxed 3-day weekend, we could work all 5 days this week, but the week after we again get a 3-weekday week. So looking forward to that. In any case, at the moment, I think the cues that we are getting from the global market, and not all of it is working today. We don't have Hong Kong and Australia, and we will not even have Europe trading. But nevertheless, for us, the all-important crude cues are not looking very positive because of a Washington Post column that says the US may end the waiver on Iran sanctions, which means countries like India have to stop importing from Iran. Well, it's only a warning, but a Washington Post column is taken seriously, so that has already sent Brent, as you can see, close to 73.5 as we speak. That's a bit serious. We haven't seen that for maybe 4-5 months now. On other things, of course, there's positivity in terms of HDFC Bank results. But again, if you come to the oil and gas results, Reliance results was received with some skepticism. And the real Geo numbers, both subscribers, revenues, ARPU, all of them were lower than what the market expected, which incidentally could be actually a bit of a positive for companies like Bharti, on hopes that price competition will get a little easier. So I'm just trying to look for the positives. There's HDFC Bank numbers. There is this positivity possibly on Bharti. But yes, there will be the big crude negative, which we have to negotiate. Morning, both of you.
Hi, good morning. And Anuj, good morning to you as well. Well, yes, you were talking about the positives. There's also numbers coming in, right? The FI numbers come through once again. So on Thursday, we had FI buying of over 1,000 odd crores. Put together, it's just buying for the last 9 trading sessions. We have almost 8,000 crores of buying. So I guess that will keep the trend upbeat as far as the indices are concerned. But I take your point, private sector numbers looking good in terms of banks. So HDFC numbers looking good. And we have a lot of big banks coming out with their numbers this week as well. So that will be in focus. And on the flip side, Reliance numbers are weak. So the odds are stacked, Anuj, in favor of the bulls and the bears today, with some big numbers in the opposite ends of the spectrum. How do you navigate through these cues today?
Morning, Sonia. So, when you have these two numbers, you just apply simple arithmetic. You look at the Nifty. HDFC Bank has 10% weight and Reliance has 10% weight. And that's the point we made on Thursday as well. And if you look at the Bank Nifty, Reliance has no weight because it's, obviously Bank Nifty index. And HDFC Bank has 35% weight. Market's assumption is that based on these numbers, logically, Reliance should fall 2%. And HDFC Bank should rally 2%. So they cancel each other out on the Nifty. But on the Bank Nifty, it's a cleaner play which is available for you. So my big assumption here is, and the question that I'm asking, and let the market answer that, is HDFC Bank going to take back the leadership firmly for the Bank Nifty? It's done well, of course, but, for last few months, it's been about ICICI Bank, Axis Bank, SBI. Is HDFC Bank now going to be the big daddy once again? So that's something that you got to watch out for. Reliance's earnings are weak, but this deleveraging is going to put some kind of floor. Also, this talk of stake sale, that's all going to keep some kind of floor. So somewhere around 1350, I think Reliance will find some kind of buying. So there's perhaps not too much Joe's getting too negative on Reliance as well. That's the limiter, especially because we are in a bull market where you want to buy all kind of dips. To cut a long story short, I think the Bank Nifty offers a far cleaner play than the Nifty today, because after this, the only missing piece here is IndusInd Bank, which normally comes out with its numbers first, hasn't yet even announced its date. So that's a bit of a niggling worry for me. But having said that, I think the Bank Nifty is poised for a fresh breakout. All-time high should happen at some point. And the Nifty, perhaps a move towards 12,000. Caveat, it has to hold the recent low, 11,550 on the Nifty. And I think on the bank nifty somewhere around 29,700, 29,800. If that holds, this is expiry week. There could be some momentum, and then we take it from there. And of course, this big rally on crude. Let's see how the market reacts to it, because it's now approaching 74. That's a big sort of headwind. It can't be just wished away. So let's see how, the market will give us a verdict today, and I think I'll take that rather than having any kind of assumptions.
Yeah, actually that would be true even of the Nifty Bank. Yeah. Nifty Bank will be unaffected by the rise in bond yields. I mean, crude will inevitably push down the rupee, push up bond yields. But that might affect more the PSU banks. So the Nifty Bank could still be a cleaner play, as you say. But yes, we have to see how much credence the market is able to give to the Washington Post column. Every decision of President Trump is a binary event, like an Indian election. It can go either ways. He may extend the waiver. He may not extend the waiver. There is no clue at all as to what can happen. Therefore, we have to just wait and see.
Okay, well, in terms of macro cues, we of course have Brent on one hand. On the other hand, you have the MPC minutes as well. There were some concerns thrown up on growth, but largely, what was the big takeaway?
Well, some concerns is a bit of an understatement. There was
there were a lot
of concerns on growth. In fact, all of them, Shaktikanta Das, the governor, and Dr. Patra, Ravindra Dhulake, all of them were deeply concerned about growth. So 3 votes for a rate cut are definitely there in April. I would think that Pamidua also sounded pretty concerned about global growth. So that would make it 4, which means 4:2. Chetan Ghate and Viralachara still look entirely unconvinced that further cuts are needed. So even then 4:2 it should go. But then, we are talking now of a very distant future, June 6th. At the moment, the way crude is going, or anything can happen. The kind of terror attack we saw in Sri Lanka, all these can make currencies nervous. And once currencies fall, central banks cannot cut. Likewise, elections, it can go either ways. If it's a stable government, then a rate cut is definitely there. So at the moment, the minutes are dovish is all we can say. But I think the market will not try to discount a June 6th event when there are so many events before that.
Okay, well, apart from that, I just want to put some more cues on the table. It's a very important week as far as earnings are concerned. So just to tell you, tomorrow you have ACC that comes out with their numbers, followed by Ultratech Cement on Wednesday. So it's going to be cement heavy tomorrow and day after. Thursday, Friday, it's full of private sector banks and autos. So on Thursday, you have Axis Bank and Maruti that come out with numbers. And on Friday, you have Hero MotoCorp and Yes Bank that come out. So it's going to be an earnings heavy week for us. But getting back to the macros, we spoke to a whole host of economists to find out what their view is on the MPC minutes. Let's listen into what they have to say.
The expectation should be that sometime around June, investment cycle will pick back up again, and that should actually boost some of these rather disquieting numbers. So my sense of all of this would be that they would probably say that we should hold back on the next rate cut until maybe not April, June, maybe.
If the inflation numbers continue to surprise as the way they have done in the last numbers, and if they remain at this level, I don't see why there is not a possibility of a rate cut. Maybe we can debate on the quantum of the rate cut, as the governor has said. But I tend to believe that possibly a rate cut could be made and the central bank could get out of the way before the budget is presented, because there is a lot of uncertainty surrounding the budget in the month of July and also the path on the monsoon. So therefore, the central bank may not get a chance for an accommodative policy beyond June.
Okay, perhaps there is room for a further rate cut, but let's see what happens. For now, let's also get back to equities and tell you what our wise men have to say as we head into trade this morning. Alexei Ostapchuk, I hope I pronounced that right, of UBS says their top-down model points to a negative 1 to 3% earnings per share growth for emerging markets in 2019, which is significantly below consensus. Recent upgrades that followed earnings beat in late Q4 FY18 reporting season have naturally increased the downside potential for the market. The high concentration of the downgrades in the IT sector means that future forecast cuts are likely to broaden into other cyclical sectors that so far have seen net upgrades. With very few exceptions, the upside across emerging market country and sector indices have been driven by a valuation re-rating, which has run ahead of a still lackluster growth reality.
Well, let's get to some money market views. Pramit Brahmabhatt of Veracity says says as long as the rupee trades above 69.20, weakness will persist. However, it will trade sideways for the day. Thus, trading range for the spot USD INR pair should be between 69.20 and 69.80.
And Sandeep Bagla of the Trust Group says MPC minutes revealed a dovishness which opened the door for a rate cut in June. However, higher Brent prices, rising yields and the absence of OMOs could lead to a mild uptick in yields in the short term. Range for the week is 7.4 to 7.5% for the new 10-year.
Okay, let's talk about the global cues then. Here's Mangalam with the world view.
Well, Wall Street indices ended higher on Thursday before going into the long weekend. So we saw a near 100-point plus gain coming in on Dow, and this was led by earnings. So stocks, be it like Honeywell, up 3% on account of earnings beats. We had United Rentals higher by about 8% as well, and a whole host of stocks. In fact, 78% of the earnings so far have beat estimates according to a data coming in from FactSet. Add to that, we had some good macro data in the Wall Street or in the US as well. March retail sales at 1.6%, which is the best since September 2017. So as a result of that, while the markets were doing well, a lot of the retail consumption names also at record highs. Most of the names we are familiar with, be it the likes of Nike, Yum, Costco, PepsiCo, Mondelez, P&G, MasterCard, as well as Microsoft and Visa. All these stocks at record highs from the S&P 500. Across the Atlantic, the European markets were by and large mixed, mildly lower, and that was on account of weak PMI data coming in from France as well as Germany. The big numbers out there was Unilever International out there. The market for India grew well in Jan to March, but slower than October and December. That is something that the street was factoring in already. Today, the European markets are shut on account of Easter Monday, along with Hang Seng and Australia too. But the Asian markets that are trading right now, all of them are mildly lower. Some of them off the lows. We have Nikkei, Kospi, as well as Taiwanese indices now currently trading in the green. However, the SGX Nifty, while indicates a dip of close to around 25 to 30 points, if you compare it to the Nifty futures close on Thursday, it's absolutely flat. And given the fact that crude is close to $74 per barrel, let's see how this pans out.